Good morning, everybody. Welcome to the Flow Show, Wednesday, the 22nd of October. And here we go again. Metals all over the place. Powerful, of course, at the moment. Lots of volatility going on there and a bit of a drag in some of the FX pairs as well. We're getting into all that in a bit. Good morning, Kate.
Morning, Ryan. Morning, everybody. Yeah, ready for another exciting day.
Yeah, let's see. Right, not to forget, we've got our offer going on our trader funding program. All plans get 30% off just until the midnight 2nd of November. Use code SPOOKY30 to take advantage of that. Do let us know if you're joining the TFP, because if you're not a member of Forex Analytics, you will also get some time in our chat room and on our platform. So come and say hello. Let us know if you're getting on board with that. Right, let's get cracking. We've had the new PM in Japan, Takaichi, saying that they will take Japan-US relations to new highs through meeting with Trump. Maybe she's taking him up Mount Fuji. That'll take him to new highs, but making the right noises thus far. It'll be interesting to see how that relationship develops. Never felt that Ishiba and Trump had the greatest relationship, not compared to Abe. Anyway, she also said that Bank of Japan monetary policy is part of broader economic policy in which the government holds responsibility, and that the BOJ and government must work closely together. Specific means of monetary policy are up to the BOJ to decide. It's a central bank 2% inflation target should be met not just through cost push factors, but price rises accompanied by wage hikes, which pretty much aligns with the BOJ. Says there's no immediate plan to revise the government BOJ joint agreement on economic policy. Apparently, she's preparing a new stimulus package, which is going to exceed the 13.9 trillion that was put up last fiscal year, with a focus on inflation, growth, and security. New Finance Minister Katayama was out and about, not saying an awful lot, but thinks that the Takaichi trade has settled to some extent, i.e. the market moves all around her. She said, generally speaking, a weak yen can boost the cost of food, so we need to be quick to launch measures to cushion the impact. According to a Reuters poll, most economists see the Bank of Japan hiking its rates to 0.75 in Q4, irrespective of Takaichi's election. 60% expect the BOJ to raise the rate in Q4. 96% see the rate at or above 0.75% by the end of Q1 2026. 67% say that the election won't delay the hike. 65% are concerned about her policies and its impact on their fiscal health. So pretty much apart from, of course, we are in a window with the BOJ. It's a bit of folly putting circles on the calendar for when they may hike. We've been saying it for a while. They do have a good chance of hiking given what the data's been like, but that window may indeed run into Q1 2026. We shall wait and see. Kay, the economic package, is that as big as what was expected, or?
Well, that is a reasonable bazooka, shall we say? But the market hasn't reacted to it at all. Yeah, it's always something further down the line, right? The package is not yet in place, still needs to be discussed in the diet, and yeah, it may take time to bring that forward. But it's a sizable one, and but as we've been talking about those packages, usually when it's for stimulus for the Japanese economy, it should get the approval in diet, and also if you look at what the coalition number of seats are now, they only need like 2 or 3 to get stuff over the line. But for bigger, or not bigger because that's big enough, but for other measures, I think changes in the law, etc., they are going to need a two-third majority, which is, and then I'm thinking about that reduction in seats, which is not a done thing by any means. But yeah, the package, I guess it's going to be validated, but we don't know when.
Yeah, we shall wait and see. But well, let's see how much it exceeds that 13.9 trillion. Yeah, we'll see if there's any other arrows in the quiver. Inflation data out the UK, and the pound has come off on the back of this data because headline inflation, well, stayed unchanged in the end. Came in at 3.8%, though missing expectations. Though the core number came down, which is a bit more important. That dropped to 3.5 from 3.6%. We also got PPI data out for the first time in, I can't remember how long, after they cancelled that because they couldn't get it right. So we assume it's right. That itself came in pretty hot as well. Output PPI 3.4%, quite a big jump there. You also saw input prices as well coming in a little bit hotter than last month, 0.8% on that one. So looking at some of the other core measures or CPI measures, for example, this is one that the bank looks at looks at pretty much, which is the CPIH. That came in unchanged at 4.1%, so it's still sticky. You see some core RPI numbers there coming in unchanged 4.4% too. So overall, it's yes, we're seeing some inflation easing in the headline numbers, the important numbers, but there are other metrics that are still looking sticky. There's been a marginal change. We're now fully pricing a rate cut in February versus pricing it in March. So that's just been pulled forward a little bit. Looking at around 67 basis points of cuts for next year as a whole. So just over 2 cuts, approaching the 3-cut mark. But yeah, the pound's had a little bit of a hit, as I say, probably about right. It shouldn't really do anything more. But we do get some more data on Friday, which could be a bit of a mover as well. So we'll wait to see if this moves can continue, particularly in euro sterling, back up into the 87s, but can't even make headway to 87.20 at the moment. Going back to yesterday's data, we had Canada CPI. And those numbers came in hotter. CPI was expected to rise to 2.3%, came in at 2.4% from prior 1.9%. The Bank of Canada core measure jumping as well to 2.8 from 2.6. And the same was pretty much seen in all the numbers there, the common, trimmed, mean, whatever, all looking a little bit hotter, also depending on your revisions on that one. Over there, we saw rate hopes cut. They've dipped to 74% for an October cut next week from 86% before that data. So not a huge change. The market's still looking for a cut next week. But Kay, is that put the cat amongst the pigeons?
It may give them the excuse to do a non-dovish cut, perhaps, but and yeah, I think they will signal a pause if they cut next week. But I still side with the majority that the likelihood of a cut is still there. We're not straying too far away from their inflation zone. Yeah, I think they could, but then the wording may be interesting because thus far, Stiffers he was trying to still err on the cautious side because of growth, and that still hasn't really turned around. But yeah, and I'll go with a neutral but dropping the dovish side of things. cut next week. That's what I think right now.
Yep, cool. Thank you very much, mate. Not on the calendars as always, but we got the fully fed services number out as well. That came in a sucky minus 22.2 for a minus 12.3. Some of the details underneath, not too good either. Employment dropped to minus 4.5 from a positive 9.4. Prices paid was a touch lower by 3 points. Prices received, though, jumped. Sorry, prices received was lower by a few points. Let's start again. Prices paid was lower, 35.8 versus 38.8 previously. Prices received was lower, 12.9 versus 21.8 prior. Wages and other cost benefits jumped though to 38.3 from 28.7. New orders came in at minus 17.4 versus a positive 0.5. So it's one of the first services numbers that we've had and not looking too good. But remember, this is just a regional report. We start to get all the PMIs soon. US Senate Majority Leader Toon says they're planning another vote on the stopgap bill today. So maybe something might give. Will be a bit of surprise if it does, but you never know. You never know. The shutdown is affecting other people now, other countries in particular. StatsCan are saying that they are going to potentially have to postpone their next trade balance data, which will be coming on the 4th of November due to the US shutdown, because it hasn't received any US import data. So maybe, Kay, they need to get Canada ADP out of retirement and start guessing some numbers.
Well, I was surprised to see that name StatsCan coming back. I thought like, oh, there we go. Yeah, that's a bit of a strange one, right? If you as another country start to be impacted by the US shutdown, not that it's going to change anything to the ping pong they have around the Democrats and Republicans table over in the US, but I I thought it was a bit of a strange line that they are impacted by it, but yeah, but it's unless they really come up with I don't know, Carney or McClem coming up saying like, oh, we are now panicking because we don't have any data anymore. I'm not sure it's going to be that important. They should get their act together. I would suppose sooner or later, sooner rather than later.
Yeah, I can imagine there is a bit of cross-border cooperation between the stats offices, particularly when you've got countries tied together so much. Maybe we'll see the similar happening with Mexico if they rely on the US for any sort of data like that. But yeah, it's not going to make that much difference. Well, except if the Bank of Canada was interested in what's happening in their trade balance, they're not going to know what's happening from the US side anyway. Trump was speaking yesterday on lots of stuff as usual. He said that maybe the meeting with China Z will not happen. Didn't really elaborate further on that. Still waffled on about tariffs and how he's got a stiff in at the Fed at the moment and needs rates lower, blah, blah, blah. Europe and the Ukraine and the Council of Wombats apparently announced the preparation of a 12-point plan to end Russia's war on Ukraine. However, Russia has apparently reiterated or did reiterate its previous terms for peace in Ukraine to the US still remain unchanged. So how that's all going to be carved up still remains to be seen. It's been talked about that this Putin-Trump meeting over in Budapest is not going to happen either. So I'm not sure what's going on with that at the moment, but that's still ticking along anyway. Apparently, China is also eyeing a three-way currency swap with Japan and South Korea. I'm not sure, Kay, if that's part of ongoing stuff or whether it's something new. I can't remember.
I don't think. Well, I mean, ongoing, but so far nothing. But the thing is that would be a bit of a strange one if Japan and South Korea would agree to that, because that would be really a stab at the US. And looking at how Takaichi wants to strengthen um, the ties with Trump and the US, I doubt that that is going to come to fruition. As I say, I mean, it's a monetary thing, but we know that everything is political, and that would be one very big political victory for China. So I doubt that that will come to sort an agreement anytime soon. I'm not sure about the Koreans, but from Japanese side, they shouldn't be. Well, that's what I think anyway. They won't agree upon that.
Yeah, likely the case. Right, so that's it from the news front. Not very interesting in those terms. Anything else, Kay?
No, mate, you covered it all.
Good. Let's move on to what's going on in prices. Well, I'm on Euro Swiss. I might as well stay on Euro Swiss. This one's still hogging all this support down here. So it's still, as you can see there, big old support area that we've got down around these lows here, the 92 level, 92, 10, 12. That's holding solid at the moment. Nothing is changing unless we're getting back above this 55, 60 level, which will then put it back into the box. And then obviously we've got another zone up here that starts from around 92, 88, 90. So this one's still under fire. I'm still a little bit long. Just going to see what it does. It's level, it's holding. That's the least you want to happen. But we'll see if we can get up above this level, whether it's going to knock its head on that. I'm going to be taking a good chunk off if we do hit and fail at this level, and just see what happens after that. Euro sterling, Ali. Yeah, we're back into 87. Nothing gangbusters going on. There's the CPI effect in there. We can't even get up to the 87.20. So that shows you how much that data counts for at the moment. Can we stay up here? Can we break up through here? I think it's going to need something. I doubt, I'd like it to, but I doubt we're just going to drift up on the back of nothing. As I say, one eye on the data come Friday. There's nothing much to come out of Europe anyway. That will swing the euro unless we get some political news or whatever. So yeah, I mean, I've got nothing much to say about this one. Kay, it's just it's in the box, and can it break it?
Yeah, I'm a bit long, but I took some off this morning on that little move up to 87.10, just because we are we are in a very closed box right now. I'd say there's no reason to add to positions unless we start to break above 87 2025, right? And yeah, there's not much to say about this. The problem is, if you're long euro sterling and we're Wednesday, you're looking at a 3-day weekend funding, and it's going to cost you something. And it's probably one of the reasons why this interest rate differential that we still have, even if gilt yields are coming down, the euro yields haven't particularly gone up either. They're following the same kind of path anyway, to a varying degree, but the same kind of path. So you're still, excuse me, you're still gonna pay something away when you're long euro sterling. And as we've been saying already, I mean, it's quite interesting, this range in particular. I've still got the impression that there are some decent range players, whether they have 87 digitals on the car on their books or so, but it's quite I think telling that we can't break specifically this box. And so I think the day that we break either side, and I still think it's going to be the top side too, but the day we break, we could be in for a decent move. But until it happens, just watch the leaves fall outside.
Yeah, 10 must have been the magic number today, because that's where I was doing a bit of slicing as well.
Yeah.
I said I was going to use any rally to knock a bit off, just because of those funding costs. So I knocked off some of my lower bit of my lower entries just
Hmm.
to pay for those costs, keep it ticking over. Don't know. I'm tempted to maybe even have a little intraday scalp if short on the 87.20 if we get up there. I
Yeah,
might prefer
maybe,
that than dip buying.
maybe, and then and but I'm also building off and then waiting, but I'm like tempted to maybe not overnight, but during the daytime, just leave like a trigger through 87.25 also to get longer again. Because it really feels like somebody or some people are trying to trade that range. It's too tight. Not too tight. No, I mean it's too tough to you go either side. There seems to be really amounts involved there. So if it breaks, I think we're gonna go. But no use to do anything stupid right now.
Yeah, yeah, absolutely. Ali, dollar CAD, my position hasn't changed. It's quite a bit of a failure yesterday. It was looking like it was going pretty well. We got up to Friday's high at least in the 60s. Then it just sort of fell out of bed a bit, and then we cracked back below this 2030 area, even broke the big figure by a few pips. This is still my main level down here. I'm going to have a look if we get down here, add a bit back to my longs, just to see if it holds, because I think there's a potentially low risk trade there. You can maybe look at that level down to the zone, down to this 38.2 fib of this whole move as your support area down there. Always do some little bits and pieces down there, but there's a lot of traffic pretty much all the way down to 139. So if you are looking at picking your points, you can either do little bits down to there, or you can just trade each individual level separately and see what happens. But yeah, if we get a hold down there, I might just add a bit in, but I'll be chopping a good chunk of that in any rallies. Anyway, we are looking to maybe nudge back up to this 20 level. Just want to see if it maybe 2030 becomes resistance yet again. But at the moment, the bounce isn't looking overly hot. But Kay, do you see any reason why this should suddenly turn around though, or is this just a little bit of leg stretching, shall we say?
It's I've got an interesting zone here, right? Just right around that 140, 140.10. If you go back, is the May high is around here. Then a little bit before April, been a low around here, and if you get even back into December 2024, but that was just a moment of a bit of retracement, and then the spike higher into the end of the year and afterwards. So it's a decent level. It's but to say that much has changed, that would be a that would be another call. I don't know. I really I thought it would be significant if we get a close below 140. That would then probably bring a bit more correction into it, and but can it really drop out of bed? Then we're talking about your 139s, 139 and a half. I also see like the 200 DMA is at 139.60. That's another one that people are going to look at. Yeah, I think if we close below 140, we can do 139 and a half, 139 and a quarter. But then we are going to probably slowly run into the Bank of Canada. People expecting a rate cut. I think you know what? After the Bank of Canada, it may get interesting,
Yeah,
depending on what they say. Because if they build in a pause and you're still hanging around this 140, the figure, they could actually trigger that move where the Canadian dollar recovers a bit, whether it be versus the dollar or versus other currencies. But yeah, we may really for a decisive move, we may have to wait unless unless the oils start to ramp higher, also making it break. But yeah, it's an interesting level, but it's also a level that could be turned out as an equilibrium level, a level where the market just takes a break and waits for what's next.
Yeah, I think so too. And yeah, I mean, obviously that CPI gave the market a little bit of a jolt, so maybe
Yeah,
we've
but
just seen
then
a little bit of position reduction, risk reduction ahead of the
yeah, but
BOC.
then you're still left with that Bank of Canada survey, which was the other way around, right?
Yeah, yeah. So it's been both sides of the coin this
Yeah,
week in
exactly.
terms of data. So yeah, we shall see. We shall see. One other one I'm going to have a look at is Aussie Kiwi because that has it just bounced off that level. It's come close to that level. This
Yeah,
was
trying
this
to.
1285 level is an old one. It goes right into. Let's go into that one. It's probably easier. It's just one of these old range tops up here, and we've hit it again. So might be getting a similar thing to here. Can it hold? Can it bounce? Or is this going to be the shakeout and things go back south? I've not been tempted to trade this really for a while after getting knocked out shorts. I would have liked it to attack that 38.2, but nothing doing. But I'm not sure what to do here, whether to have a little nibble long or I think with gold crapping out K, that's going to be a bit of a
Oh,
weight
wait.
around the Aussie's neck.
Yeah.
And they've also had a little bit of a bum fight with China over flying planes around the South China Sea. China not happy with them, and doesn't take much for China to start pushing some buttons.
Mm.
So yeah, I think this one's going to be interesting. I think if we close underneath it and start holding below it, we could be in for a bit of a steeper pullback on this one.
Yeah, and also the fact that the US now wants the Australians to help them with their rare earths. So it's a bit of a fight in the Aussie. It's the Aussie side of things that's going to be directional for this one, I guess, right now. Although the Kiwi has shown a bit of resilience of late, it was looking extremely offered while until like 24, 48 hours ago, and now the Kiwi is actually showing a bit more resilience, and it may be this Aussie Kiwi holding up the Kiwi right now. Yeah, I mean we're trying. We are not succeeding, but we are trying on that Aussie to recover that 57, 50, 60. And that's probably weighing on this Aussie Kiwi as well. Yeah, the Aussies. For the short term, 80, 80, 20, 80, 25, or 75, 80, and then 20, 25 on top, and then we will see what gives. It's as you say, it's really been pushed and pulled by different um, headlines, perceptions. Is it going to be a good thing if they side with the US for their rare earths? It should be. On the other side, it's probably enjoyed a bit of strength while gold was rallying, but that's now doing the yo-yo overnight, $160 between the high and low or something. I mean, and then yesterday, of course, the big drop, and that's also impacting the Aussie in a way. I think the Aussie is it the fourth, fifth producer in gold as well.
Yeah, they're pretty big. Yeah,
Yeah,
for
so that's
gold.
also so that's also one that's dragging the Aussie around. So it's a bit unclear what to do with the Aussie, and that's reflected in that range now, right? And then while you are on gold, so it won't. So I don't have to show. Oh well, I would love to show it though because I got a big fat trend line coming in not too far from the lows that we did around 4,000. So if you want, I'll take it over.
Yeah, yeah. Go ahead, mate.
Yes. So just for the gold bugs in our midst, which I trust there are many of you around right now and wondering what's going to happen next. What's happening with my stuff here? Hold on. Yeah, okay. So we had a first break, then we had another trend line break here. Actually, I think that one must have been, no. So it was coming out a little higher. But yeah, I mean, on the short, this trend line from August, from really, so it depends what you want to do when you put like fibs in or so. I was looking at this 15th of May as well because it's the last low before we started to try and ramp higher again. But if you take really from where the August ramp started, we came pretty close to the 38.2, which is just below 4,000. But also, if you look at this, we came very close to this trend line support here. Now, again, as we has been saying a lot of times, this is gold. This is not an FX pair, right? So it can get very volatile. It can break a level and then all of a sudden recover it. We've seen that yesterday or the day before as well when we had the 40 80 85 around here somewhere. It broke and then it went back up. We saw it overnight. That was some move. 4,000 and then back up to 4160, where we find the 50% of the last move. So if you want to stick a rate on it for the recovery, that 4160, which has been traded here as well, is the 50% of that last leg higher to the highs, to the all-time highs. And it stopped right there. The other interesting thing is if you take, but that's for really, if you want to really get into the technical analysis 1.1, we had this double top here. That was about a small $200, and we actually tagged that one as well. If you do the double top, we actually the target was met on the double top formation as well. And obviously, this is a very, very big psychological level, okay? So this is the one we are going to have to monitor extremely closely. 4,039 three quarters. I think this is where the whole thing stands or corrects much deeper. And then we're probably talking about people talking about 3,800s here, where the prior high was 3,900, 3,800, and then even why not, go back all the way down to 3,700. But I think it is really too early to call it, because if you look at the fundamental reasons why this has been going up, and yes, we've been warning about those this is, as I said, those last 150 bucks, this is starting to look dangerous, where we had the correction and a very violent one. But it may be significant enough that we saw those bids creeping just around 4,000. Because if you think about Trump saying that the meeting with China may not happen, the meeting with Putin may not happen, Ukraine, Russia, just between them, EU, Ukraine wanting to make a 12-point peace plan, and Russia said, well, forget about it. I mean, our lines are our lines. That is still adding to the fundamental reasons why it should hold up. And then you see a bit of coming down of interest rates that is adding to the fund. Although the impact of interest rates, we have seen that even with US yields, let's say, going up and down, this had not prevented this move, okay? But if they come down, it is maybe an additional reason why this is going to hold, okay? I haven't traded it yet, but I'm really very interested in this level here. This zone here, I think, is a bit of a make or break zone for the shorter term in what gold is concerned. Silver, I'm not going to say it's a lot clearer. It's at least as violent, but since we went below this 49.80, 50 and a quarter, we haven't really looked back. We have tested the next support, which is around 47 and a half, 47 three quarters, and held. Okay, so that's your first thing. But as long as we are below 50 now, call it 50, give and take those 20 cents, because it's such a big mover that you can hardly bank on one particular price. Okay, just look at where we close every day. It is possible that we go back into this zone here, which is 46, down to 45.5. That's all very possible. Now, if we do this, if there is more liquidation of those longs and the way it goes, like this morning, for instance, when after we came in, very early doors, we were trading 41.60. We lost $100 in the space of in gold, then in the space of less than an hour. Be very careful what you do, because those levels, I mean, are the people done getting out of overloads of positions? That's really not a we don't know. We as retail traders, we don't know. So be careful with everything you do. Keep your positions if you want positions to um, the minimum, and stay disciplined, because it could be, that we're going for this and that. Oh, and if you buy against here, or maybe I will, and we get stopped out below, I don't know, 34.60 or whatever, 39.60 or whatever, that it bounces back. That's the rule of markets. Okay, don't go and hang yourself, because this would happen. Okay, but the thing what you can do is keep your positions small, and so it won't hurt you too much if you do something to counter any of those moves, whether it be buying here or selling there, if you think that is a decent retracement level. That is the one thing. Brand, I'm having issues with gold being a good indicator of risk. Gold has been trading the fundamentals, has been trading supply issues, like silver even more, but gold the same. I mean, we heard about shipping tons of the Bank of England vaults to the US, and then over to perhaps the Middle East, and then China and whatever. I am not. When things will quiet down, I will say, yes, this can be an indicator for risk. But in the situation we are now, it's not really an indicator for risk. Just look at if you look at other indicators for risk, like equity markets, for instance, they have had a bit of a drop, but then they're back close to all-time highs. We are actually back to all-time highs on the S&P, for instance. It's very hard to pinpoint one instrument right now to really express risk. Okay, I'm in a situation right now where I think risk is too big a word and too vague a term to stick onto anything really right now, because we could say, like, for instance, if you look at dollar yen or euro yen, yeah, euro yen is remaining quite high, although it's giving back some right now, but it's still trading at very lofty levels. Is it positive risk? In a normal market where nothing else is going on, yes, but we are talking politics in Japan here as well, and it has gone onto the risk train maybe for one or two sessions. So I find that, globally speaking, now the talk about risk is a bit difficult and just I'm finding that personally. I don't know what you think about that, Ryan, but
No, absolutely agree, mate. Absolutely agree. It's just the risk. I mean, if looking just back at gold again, talking about risk and stuff. You could have said, "Oh, gold might have come off because Trump was meeting Putin again,"
yeah,
but then that meeting's off, and gold hasn't exactly rallied all the way back up. We
no,
saw a little move after the Israel deal, and that all went through, but that didn't stop it going on to all-time highs after. So yeah, I agree with you on the risk front, most definitely. You're looking at the euro. I still would love a test of that 15 level, that 115 level.
yeah,
Yeah, right in there.
yeah, yeah, yeah. Yeah, I mean that's possible as well. I left this line in, but I'm probably going to take it out. It's a bit too steep, but yeah, for now at least, the dollar is doing pretty okay. Whether it be versus euro, sterling, but is it the dollar being strong, or the rest being weak? I leave that in the middle right now. But it does look like we just may just slip and slide until we get a retest of this 115.40, in my opinion. And then the 115 we will see. Does anything have enough strength to go pick a real direction? We will see. But yeah, it's a bit funny that equity markets haven't reacted yet. The dollar retains its big tone on those headlines, Putin and the US, China, etc. It's a bit of a strange one. And then I'm going to make Brand happy, and then I'm closing for today. Cable, we broke through the 133.60. We broke through the 133, 30, 35. It's possible that we are going to see have a look below 133 at some stage. That is the way things are looking right now. Cable is still trading pretty heavy. And then look what we are going to do. Are we going to break out of this scenario? Brings us back to what I've been saying just a minute ago. Does any currency have any strength enough in it to really go and break stuff? That remains to be seen. And I am not right now convinced that even the dollar has the strength to go and break things. But we will see. Keep a very close eye on what's going to happen if we get down to 132, 50, 60 on the cable, if at any time we are there, or we break back above 133.60. Ryan, back over to you, mate.
Yeah, thanks, mate. Yeah, that cable is looking interesting. If it has another dip under that 133 and starts holding, then I think we can see a bit of a deeper pullback. It's tried a couple of times in October, but couldn't hold underneath it. Those last two lows, what was it? 14th, 10th,
Here,
something like that. Yeah,
this one
yeah,
here, 260 and 2.5.
yeah. It's had a couple of little pokes under.
Yeah.
Couldn't stay under that 133. So if we get a third move now that holds under there, then I think we're going to see some downside.
Was also a bit of a springboard back in August here with the
Yeah,
first recovery correction, and then boom, it went. So yeah, it's an interesting level for sure around here if we would get down there.
yeah. Cool. Well, thank you very much, mate. Good stuff as always, and thank you everyone for coming to the Flow Show. Take it easy. Try not to get caught up in all this volatility, particularly in precious metals. If in doubt, stay out. That's always the easy rule. It's flying around a bit at the moment. Have a great day, everybody, and we'll see you tomorrow.